And as far as the loan itself, it's guaranteed portion of it by the government, correct?
That's correct, yeah.
And what percentage is that?
Maximum is 90%, but typically more of 85% is the average guarantee. And then we do a lot of what we call express loans at the 50% guarantee. And express loans are actually low documentation loans where usually the borrower only fills out 1 or 2 page application. Even some of our express loan lenders are doing their lending online. So it's a very abbreviated application, but that's a 50% guarantee for that. The average SBA guarantee is 85% for most SBA loans.
How about the, I noticed a few years ago there were a shortage of funding by the SBA. Could you explain if that is in existence right now?
No, it's not. We're not having that problem anymore. The reason why we don't have that problem anymore is that at that time period, well, I'll say in the old days, we actually had to go to Congress each year and to get a appropriation from Congress to fund the loss reserve for the SBA loan program. That's no longer necessary. So actually the way the program is structured now is it's what we call zero subsidy. So there's no direct appropriation for the loss fund. The losses are covered by user fees. So when you actually apply for an SBA guarantee loan and you get your loan, you'll pay a fee, what we call the guarantee fee, which ranges anywhere between 2 up to 4%, around 4% for the loan. And that fee goes into a fund that covers the losses for the SBA program. Because the program is completely supported by the users today, there's no need for us to go to Congress and request money each year. So, in fact, we don't have this problem of running out of money anymore.
Okay, and actually the source of money comes from the lender anyway, correct?
Yeah, for the principal for the loan does. Okay. The only time actually we are involved in the process with the lender, other than granting the guarantee, is in the case of a default.
Right.
And then when the loan goes into default, the way that works is that SBA purchased the loan from the lender. So we pay the lender the guarantee, 85%, let's say, of the principal, the remaining principal balance, and whatever accrued interest. And that's paid by SBA to the lender, and SBA purchases the loan. And then we work with the lender to get back as much money as we can to do some kind of a recovery on the loan.
I see. Who does the recoveries? It's
actually
government?
Usually the lender operating right, under SBA supervision.
What is the success rate on this? Or maybe I should say, what's the default rate?
The default rate on SBA loans is, it depends on the industries. Some industries are more than others, and it depends also on the region of the country. Some regions are better than others, and economic times. So, but we can say our default rates are probably, on average, somewhere in the 10% range. That's a guesstimate. The loss rates are actually very good. They're less than 3%, so the total loss. So very few of our, we don't really lose that much money, and all of the losses are covered by the people that borrow the funds. So
when you say loss rate,
where we actually write off the remaining portion of the loan.
I see.
So when a loan goes into default, we may recover a portion of the loan back from the business.
I see. Okay.
Because we may take collateral, and that collateral can be sold. We may be able to get some money from the borrower, maybe not all of the money. So whenever there's a default, sometimes we'll recover the entire loan actually, but sometimes we won't recover as much. So when you sum up our entire portfolio activity, the total loss from the defaults where we were not able to recover is usually less than about 3%. It's less than 3%, which is a very strong portfolio really for us.
Good. And then some lenders have certain targeted industry, and some will not accept certain kind of business. Am I correct to say that?
Yeah, that's true. And the thing is that because the banking industry in the U.S. is very dynamic, There is the banks themselves, the well-established banks are always changing their lending and their credit criteria. Then there's also new players that are entering the industry a lot. New banks are coming into the market, and then some banks are leaving the market. And then the general economic conditions in the economy also are impacting what the lenders are doing. So what we recommend to borrowers is that you talk to a few banks and find out what the situation is at the bank. Because maybe 3 years ago, a certain bank would say, well, we're not doing any restaurant startups now. But 3 years later, they may be open again to do restaurant startups. It's not a static situation. It's constantly changing because the industry is always in some state of change.
I see. And I understand also there are different types of SBA lenders.
Yes.
Okay. One, there's also lenders who can do their own underwriting.
Right. What we have is there's several tiers of lending, but from a practical aspect, the two tiers that matter the most are the general lenders and the preferred lenders. The general lenders, their loans have to be looked at on a loan-by-loan basis by the SBA loan officers. So if they're a general lender, they will review the loan, and then they will send the loan into SBA, and we will look at each loan before we will approve the guarantee. But lenders that have gained a lot of experience, usually 2 or 3 years of SBA lending experience with significant volume, then they are granted the status of preferred lender. And that's when they have the authority to actually